The following program is sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
It's Friday afternoon, and we're going to be talking about money. Next week, Tuesday to Thursday, I'm going to be gone to a conference. I go to this conference every year. And what's surprising to me is how little evaluation people do of the conference. A lot of newsletter writers, a huge number of newsletter writers show up for this conference, and they have both speaking engagements and breakout sessions, and they will get up and talk about different stocks. They'll get up and talk about the economy. They'll talk about everything. I remember one speaker, 2012, he spent the entire lunch hour laying out why Romney was going to win the election. You could count on it. You could take it to the bank. Absolutely 100% certain. You know, the next year he was again the lunch speaker. He never mentioned that at all. And the other people that were sitting at my table, no one else mentioned it either. They just sat in rapture listening to what he had to say. To me, I like to evaluate what's going on. One woman gets up and who writes a newsletter. She manages almost $1 billion in assets, and I'm sure this is the standard presentation that she uses, is she goes through stocks that she bought and sold. She bought them at this price, she sold them at this price. Every single stock that she puts up and talks about, she made money on. There's not a single loser that she ever shows up with. So last year I decided, after having seen her for a couple of years, I decided to write down the 8 stocks that she recommended, because she will, at the end of the time, recommend 8 stocks that she's recommended in her newsletter, or 6 or whatever it might be. And she wrote down the 8 stocks, and so I tracked them for a few months, and 7 of the 8 had lost money. And her time frame on most stocks is only a few months. She's a very short term a trader, and you know I'm a long-term investor, so I look at things over the long term. And you know, when I look at it, I have losers, but in the whole time she's made presentations, she's never presented a single stock she's lost money in. So I'm interested this year to see what she presents and if she talks about these stocks which actually did lose money. Probably not. So evaluation is a lot of what makes sense, both for the market and in life as well. I want to talk and shift gears a little bit, talk about the mid-1700s. Catherine the Great was ruling Russia at the time. And her field marshal was Gregory Potemkin. They had and invited a number of foreign dignitaries to visit Russia. But when she looked around and saw what was going on, she saw that the villages didn't look all that great. She didn't want to show that to the foreign dignitaries. So she had Potemkin build villages that showed an illusion of prosperity. It was totally illusionary. They were not lived in. They weren't inhabited. It was simply to show for those visiting dignitaries. It's from that we get the phrase, a Potemkin village. It's a metaphor that means things look very elaborate and impressive, but there's no real substance. And we live in that kind of a world. We live in a world of spin. You know, and politicians will talk about revenue enhancements. Revenue enhancements. What they're really talking about is taxes, but who wants to talk about taxes? It's much more exciting to talk about revenue enhancements. You have companies that talk about non-performing assets. non-performing assets. What they really mean is failed business ventures, either part of the company or whole company. The military talks about collateral damage. I like that. Collateral damage. That means they killed civilians. But you don't want to talk about innocent people dying. You talk about collateral damage. And two that I really love are vertically deployed anti-personnel devices. Think about that. Vertically deployed anti-personnel devices. You know, there was a time that we called that not a vertically deployed anti-personnel device. We called that a bomb. It was pretty straightforward. It was pretty simple. And it described what it was. And then, of course, there's servicing the target. You know, how do you service the target? That really means killing the enemy. You know, almost everyone understands. It's almost like half-truths. It's a weasel works. It's a slick image. You know, we get this day in and day out. There's this whole thought right now that millennials don't believe in the advertising. I'm not sure that I believe a lot of the advertising that goes on. It's a spin world. You know, consumers get studies and product safety issues, stories, news stories, and they're published as news. But what's not mentioned is oftentimes those same studies are funded by the corporations which manufacture the products. Sometimes they're diametrically opposed to the positions that independent groups find. The Consumers Union, for example, will find a certain product's not safe, but there is a new study that comes out and shows that this product, whatever it might be, is safe. That news article doesn't go on to mention that that study was funded by the company that manufactures that product. You know, there was a study that defended Redux, a diet drug. It finally came off the market because it caused heart problems. But before that, there were people that were really damaged. But the study showed it was safe to take. Many companies, some of the great companies that you hear about, Anheuser-Busch, Pfizer, Philip Morris, Allstate, American Cyanamid, Eli Lilly, Exxon, Monsanto, Upjohn, chemical manufacturers, and those companies continue to fund studies which are diametrically opposed to independent studies. You know, if science is really valid, it should be the type of science that can be proved false. So if it's not true, you should be able to prove that it's false. But much of the science and many of the studies we see don't have that at all. You know, probably the most famous of all is the tobacco industry. In 1998, as whistleblowers came out, they were punished. In the 1990s, you had a number of studies. And through the 1980s, you had a number of studies that showed that cigarette smoking was good and safe. You know, one of the funniest stories is when I was growing up, one of my friends, high school friends, his mother actually had essentially a nervous breakdown. And the recommendation from her doctor was that she should take up smoking. I mean, those were things when I was growing up we didn't really understand. But by the 90s, we really understood. The studies were showing that smoking was hazardous to your health. But it took a long time before that became valid. You know, we see that in so many aspects of where we are. It's no wonder that people begin to discount the advertising that we see, the data that doesn't exist. What we're seeing is a spin, a story which isn't really backed by real data. You know, I live in an industry where you get to see companies that are talking about being fiduciaries, when in fact, it turns out when they do get into a problem and they do go to arbitration, They say, we're not fiduciaries. We only have the obligation to be suitable. You know, they talk about the returns. They talk about how well they're doing for clients. But Eugene Fama, shared the Nobel Prize, and his studies show that 93% of professional money managers underperform the market. And his most recent study shows that 99% underperform the market. I have questions about that data. It's recent. It's only recent data, and it's a very short-term data. If you look at it long-term, I think that it's more valid with what he found before. Jackson National Life, I've talked about this any number of times, and it's on the website. Jackson National Life in 2012 did a survey of financial advisors and asked financial advisors how many outperformed the market. And 75% of financial advisors said that they outperformed the market. Cerulli and Associates did a study and looked at the actual numbers. And they found not that 75% outperformed, but while the market during 2010 and 11, during those 2 years, was up a total of 17%, financial advisors were up 4%. We live in a world of spin. But I want to bring this back. We're coming up to a commercial break. Don't go away. I got more to say. We've got a whole lot to cover today, and you'll want to hear my guest because he has something to say about all this too. I'll be back after the commercial.
About Money will resume in a moment with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
You know, Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our clients' interests first in all portfolio decisions.
If you're looking for a home for your seven-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com for the employer.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
So I've been talking about forecast, about living in a time of spin when you hear stories. But it's not just stories. There's a book called The Little Book of Behavioral Investing, a subtitle of How Not to Be Your Own Worst Enemy by James Montier. And in Chapter 5, it talks about forecasting, some of which I completely disagree with, some of which I do agree with. And he quotes Lao Tzu in the 6th century BC saying, "Those who have knowledge don't predict, and those who do predict don't have knowledge." I disagree. I think we live in a world where you have to predict. You have to look into the future. But you have to look with a knowledge of the risks that are involved. He looks at, for example, Montier looks at the company earnings, and he says company earnings that are forecast 2 years out are wrong 94% of the time. The average is wrong 94% of the time. 12 months out, they're wrong 45% of the time. It seems as though the analysts don't have a clue about earnings. They sit down and forecast out what they think is going to happen, but his analysis is that they don't have a clue as to what happens. I think when you're forecasting down to the pennies, and when a company misses their earnings by a penny or 2 pennies, I think that's foolishness. If a company has earnings of $2.54 and analysts expected $2.56, I think that's close enough to say that they made their earnings but the market will actually punish them. And so what you have is a gamemanship that goes on where you have the CEOs and the CFOs of companies lowering expectations so that they look like they beat their earnings, when in fact, most of it is lowering expectations, talking about the negative, so that when they do announce their earnings, they look better. When they do announce their revenues, they look better. Target prices are another thing. When analysts forecast target prices, the average of a target price is 25% higher than the current price. In the year 2000, and we all know what happened in the year 2000, analysts predicted that prices would be up 37% by the end of the year. January 1st, 2000, they predicted that stock prices would be up 37% at the end of the year. We all know what happened. The market was down. There were a few stocks, by the way, that were up, I'm happy to say. The actual was down considerably. In 2008, a period that's more familiar and more recent, the forecast was that for 2008, stock prices from the beginning of the year to the end of the year would be up 24%. In fact, in 2008, stock prices fell almost 40%. They didn't even get the direction right in those times. You know, I've quoted Philip Tetlock a number of times. He did a psychology study looking at political and psychological, all these different events that were taking place. He wrote a book back in 1987, and he looked at predictions, and he looked at a broad array of experts in domestic politics, in economics, in international relations, things like what was going to happen to the USSR, what was going to happen with the Gulf War, what was going on with the Japanese real estate bubble, the succession of Quebec from Canada, and other major things. And his conclusion in the book, Expert Political Judgment, is that the predictions of the experts were no better than random chance. Most experts were actually grossly overconfident. They weren't relying on the data. They were grossly overconfident. 15% of the events that they said had no chance to happen actually did happen. And 25% of the things they said were sure you could count on, you could take it to the bank, 25% of those actually failed. And it was a broad array: economics, politics, international affairs. Many of those experts predicted and made their predictions with an 80% confidence. You know, no better than a 50-50 chance, no better than a flip of a coin. And the reason a lot of that happened is because experts are supposed to have the knowledge of what's going on in their field. They have the knowledge, the ability. So they're spinning their opinions. And very often, those opinions are opinions, not based on data. And when they do come off, when they don't come out, they say, if only, and they come up with a reason. If only the Fed had raised rates. If only the Fed had printed more money. If only the Fed hadn't printed money. If this, if that. Or it's something outside of the model that happened. Or it was almost right. It almost did happen. Or it just hasn't happened yet. So with all that conclusion, there's a reason why people distrust forecast as well. There's a reason why it makes sense to look at how well people forecast, how well they look forward, and what their actual returns are. It's in that line that I want to talk about my guest today, Chris Mefford of Community Affinity. No, I said that wrong. Okay. Chris, welcome to the program.
Thank you. It's community attributes.
Community attributes.
You bet. But it's good to have affinity for community attributes.
So why don't we start with your background?
Thank you. I'm an economist, an economic development consultant. I'm from Iowa originally. My wife and I moved out to Seattle in 1994. I have undergraduate training in math and economics, master's in urban and regional planning, and an MBA as well. My company, Community Attributes, would do a broad range of data and economic analysis. I started the company in 2005. We're a 25-person consulting firm now doing a whole range of data analytics across all sectors and all fields. And our core competencies in data and economic modeling, along with data visualization, we strive to apply in all sorts of areas in business and community development.
So why don't you give us some examples of what you...
You bet. We serve municipalities, we serve corporations. We've done a lot of work with the Bill and Melinda Gates Foundation, which is a good example to draw from. A lot of work at the Gates Foundation has centered around public libraries, and we've used data to help drive or help inform their decision-making about how much money to give public libraries all across the U.S.
And that decision-making involves data on what? What determines?
Right. Their goal was to foster access to technology to all Americans, to all people around the world. They have just as much activity in the global libraries field. And we helped them define what that meant, identify data that were available and useful to quantify and measure impact and evaluation. That word evaluation you opened your show with is central to this understanding. And there are no data to show who does or does not have access to technology. But we did successfully apply a hypothesis that persons in poverty, of which there are good data for, is a good proxy for the location and concentrations where people don't have access to technology. So we measured that, the proximity of persons in poverty to library outlets across the U.S. And then we looked at and had libraries send us data on how many workstations, how many computers they had in their library. And we compared those numbers together, ranked them across all libraries, and helped the Gates Foundation choose how much money to award public libraries across the U.S. to buy computers.
And you mentioned across the U.S. Are they doing this on a worldwide basis as well?
Most definitely. And their strategies in different countries vary depending on the field, the library's field, and the capacity for organizations there. So that program I just described was a program they did in the late 2000s, but they have many, many other strategies of how to work with libraries, and every country's a little bit different.
And it seems like that really makes sense to deal with the people that have poverty, because the people that have wealth can afford to buy the computers and the tablets and
That's right.
the smartphones. It's
access to information and data, and access to the information that's disseminated across the internet these days is critical for the well-being of all. And so without that access, people really lack a basic platform for healthcare, immigration services, a whole range of things that are required to have access to the internet in 2015.
And it seems like it's something that is also building the middle class in developing countries.
Right. And again, data and access to technology throughout all those countries is an important way to empower their well-being. Examples of farms in Africa where there's no phone service, but deploying cell phone technologies is a way for them to have access to help with their farming. So ways to get data in people's hands to make informed decisions is what that's all about.
It sounds like a wonderful program.
They're all wonderful programs. The Gates Foundation is groundbreaking in using data to drive their decision making, and it permeates everything they do.
But I think the key that you said was it's driven by data.
Mm-hmm. Thank you.
It's driven by what you find, and it's not a gut kind of decision or a forecast of looking at, driving through a neighborhood and saying this needs this.
Absolutely. That's near and dear to our hearts in terms of not using vague language and getting past perceptions to really measure something, to have a common understanding of what a situation might be or what the outlook might be.
That's great. We're going to come back right after the commercial break, so don't go away. We've got more to talk about. We just talked about one example, but there's more to come. So don't go away. We'll be right back.
More About Money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
We're back with more About Money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
So I'm here with Chris Medford of Medford. I'll get it right. Of community attributes. But give me a description of community attributes in general.
You bet.
We'd used an example, but community attributes, what do they do?
Well, we say we have an elevator speech, but we have to be in the Columbia Tower together to ride the 76th floor elevator to really get it out. We use data and economics. Our tagline is we tell data-rich stories about communities that are important to decision makers. And there's a lot in that to me. Data is at the core of everything we do. So we want that to be central to all the products that we do, which are studies. It can be websites. We're very into publishing websites these days. But that data we want to be wrapped in economics. That's the other way I describe it. So we hope that all the products that we publish, all the reports that we write, a solid economic framework is evident and driven by real data. So we'll do economic development plans for cities. We've done a lot of economic impact reports. We just published a fabulous study about Washington State University that quantifies and communicates the economic impact and the reach of WSU throughout Washington State. And that elevated the story and an understanding of how WSU is more important to Washingtonians than most Washingtonians would otherwise know about. We've done data analytics on just about every industry and sector in Washington State. A lot of our data and analytics drove or supported decision-making with the aerospace industry a year and a half ago when the legislature was involved in very important decision-making about tax rates to set for the Boeing company. Mm-hmm. It was our data and analytics that helped inform a lot of those decisions.
That's interesting. So, and it's all database, so it's not
right.
Supposition. It's not.
That's right. When we do economic development plans for communities, very often we will begin with an economic profile of their community. And that's such an important platform to establish. It's not unusual for us to go into a community and have leaders and citizens have opposite opinions about what's happening in their community. One person will say, we're growing too fast. Another person will say, we're not growing quickly enough. There's so much more opportunity out there. So our data will enable them to talk to each other and say, we're growing at 1.8%. So they can't argue about the 1.8% any longer. We now have certainty. A lot of what you were talking about earlier about the spin and the challenges that come with that lead to anxiety. And data can trump anxiety. If we avoid using jargon and overgeneralizations and use more precise data to have that same conversation, that anxiety goes way, way down, and you're able to have a more honest, frank conversation to make better decisions.
And for that community that's growing 1.8%, for the people that are looking at that, whether it's too fast or too slow, they can say this is the impact that's having, right?
That's right. And they can look at the opportunity. They can say, well, that 1.8% is slower than the regional growth of, say, 2.5%. So why aren't we growing as quickly as the region is? And they'll say, we're missing on opportunity, and let's figure out how to go after that. But it sets the stage for a more informed conversation that, without having done that data-driven economic profile up front, it would open itself up for a lot of unnecessary or inefficient debates and volleying of perspectives where they have no way of knowing whether they see eye to eye or not.
So we've talked about municipalities, we've talked about the Gates Foundation, and it's a foundation. But you also mentioned that you do work for private companies. So tell us a little bit about that
Absolutely.
aspect.
Thank you. Companies are embracing data more and more for their planning and decision making. And one way that we wish to help corporations is to help to develop a data dashboard for their day-to-day tracking, their long-term decision making, and really to inform everything they do. We publish websites. We have, of the 25 people in our firm now, we have 5 or 6 people that know how to program in web-based languages to publish our data online. And more data are available in a live exchange formats through APIs, is the jargon of how websites talk to each other and share data back and forth with each other. So now we are able to work with a client, a private client, and say, what are the data that you value to have your regular decision, your regular conversations with, and to do your long-range plans? Now let's pull those data in, show them using data visualizations, whether it's a plain old data table or a bar chart or a line chart, and display all that on an attractive website that people understand the data quickly in, to have that be a resource they can turn to every day. And we've done that for a number of private organizations that have informed their strategic planning, mergers and acquisitions, real estate decision making. That's a very exciting place to be with data these days.
It sounds like it's really exciting. A lot of people talk about big data.
Right.
And you said before you don't think about big data.
Well, it's just the term that is another one of those jargon terms that means something different to different people. There's no doubt we at Community Attributes are into big data. However, I believe the term is best reserved for all the millions of microtransactions happening worldwide that are now able to be captured electronically, and only through computers and algorithms can be processed to make sense of. And that's usually beyond the pale of what our clients ask of us. Most of the data that we use are either secondary data sources or custom data that we'll go out and gather through polls and surveys. Our big strength at Community Attributes is pulling different data sources together to tell a story that no one data source can tell. So it's disparate data sources. We aggregate it, we slice it and dice it and make it fit into a narrative that is meaningful to our clients' needs.
So what happens if there's holes in the data? What happens if there's there's a couple sets of data that exist and a couple sets of data that doesn't exist?
Yeah, thank you. That's all these topics are near and dear to my heart. We value transparency above all else in the work that we do. So when there's a hole, let's talk about that hole and let's figure out how to fill it. And our clients will have different capabilities of how to fill that data hole. Sometimes they don't have the resources to fund a whole new survey that has to happen to do some primary data collection to fill that hole. So we'll talk with them about their options. And maybe there's a proxy, just like in the library's example, there was a big hole where we did not have data of the people that did not have access to technology. We did have data on poverty. And while we don't think that's a perfect fit, that was a way to fill that hole. So the way we handle that as a firm is we're transparent to a fault. We'll say, we don't know that number. Here's an assumption, or here's another way to get at that. And we'll publish that very openly and transparently. And we'll say to our clients or the public, if you've got a better number, let's talk about it. If there's another way to fill it, let's talk about that. But there's almost always a way to fill those data holes. And it's critical that we're honest and open about how we're doing that.
I would imagine, too, that there's a question about how, when you're forecasting into the future, how certain you can be
right
10 years from now or 20 years from now.
Absolutely. And we do forecasts. We value forecasts. We love forecasts. And as I've said, what I believe is the harder and harder we work on a forecast and the more precise of a number we forecast, then the more certain we are that that is not the right number. And it's a little bit of humor, but it's a lot of fact too, because when we're planning out in the future, especially it's 15, 20, 25 years in the future, we're basing that forecast on historic data. And that historic data reflect human behavior or surprising events or a lot of strategic effort to have gone into maintaining that baseline norm. So we'll develop that forecast, but we need to be realists and say something different is going to happen. And what is it? In 2015, we're all painfully aware of areas of risk, whether it's climate change or geological events or horrible acts of terrorism or something that dramatically changes a community or an area that we're studying. And we need to at least think through the areas of risk and how that might create a different scenario than what our traditional economic forecast might be saying otherwise.
Well, it sounds like an awesome company, awesome story, and sounds very, very valuable. So if someone had a need for your services, how would they get a hold of you?
Oh, thanks very much. We're very proud of our website, just to give an overview of the company, and it's www.communityattributes.com. My email is chris@communityattributes.com. All that information is on our website. Again, we serve all sectors. We want to be in arts and culture, health and wellness, education. So anything that has that core competency need of data analytics and an economic understanding, we like to think there's a way we can help.
That's great. Thanks for being on the program.
Thank you for having me. What a treat.
So we're going to come up to a commercial break, but before we get there, let me give you a little preview of what's coming after the break. I'm going to be talking about understanding how the world is changing, what's going on. In the past, I've talked a number of times, and I will continue to talk about a study that was done by Standard Chartered Bank of the UK that said we live in a time of a GDP which is growing faster than average. The first time it happened, the first super cycle, was from 1870 to 1913, driven by the industrialization of the U.S. The second time, 1945 to 1970, driven by the rebuilding of Europe. And now we live in another time when we'll have a super cycle that's driven by the emergence of the rest of the world. I'm going to be talking about that in more specific terms after the break, so don't go away. I'll be right back after the break.
Stay tuned. About Money returns in a moment with your host, Mike Adams, here on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
You know, Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our clients' interests first in all portfolio decisions.
If you're looking for a home for your seven-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
The Ad Council.
About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
So we're living in a world that's changing faster and faster. You know, there was a study done by McKinsey & Company back in 2007 that said the leading companies in industries were changing 3 times faster by 2007 than they were in 1977. We're seeing that change and the transformation, and it's not just technology companies. When you look at the restaurant industry, when you look at clothing, when you look at all those industries, there's dramatic changes going on, and it's probably going to accelerate. We live in a world where the acceleration is probably going to be exponential, and I've talked about that as another theme. It's not a straight line. Looking at a very short period of time, it looks like a straight line, but the fact is it appears we're growing exponentially. And a lot of that growth is happening in developing countries. We went into those developing countries looking for cheap labor. We outsourced a lot of our production. But we've lifted the standard of living in many of those countries to the point that those people are not subsistence anymore. They're actually beginning to buy. They're beginning to buy our lattes. They're beginning to buy our cars. They're beginning to buy our cell phones, our smartphones. The times they are a-changing. That's been a theme of my portfolios, building that. The times they are a-changing. We live in this time of a super cycle where things are growing very rapidly. By 2030, the prediction is that 93% of the world's middle class will live in the emerging countries. China alone will have half of the increase. India is seeing a 10-fold growth to 583 million people by that period of time, almost twice the U.S. population. And for all the talk about China, and there's all this talk about how China's doing, if you look at India, for example, the GDP of India is expected to grow at 7.5% versus China's 6.8%. At least that's for this coming year. They have a low energy cost with what's gone on with oil. They have a lot of foreign investment coming in. People looking at the opportunities in India. They've got a middle class that's growing and rising, and a population that's very young. Approximately half of their 1.2 billion people are people that are under 25 years of age. Half the population is under 25 years of age. By the year 2020, 5 years from now, the world's youngest population in a country will be in India. It may have, because other countries are growing older and having people who are retiring, India may end up having the largest workforce in the world. The largest workforce. They'll be educated, they're gaining education, and so you're going to have a large educated workforce in the country of India. That's one of the changes that's going on, and it's going to have an impact. Those are people that are not going to be living at a subsistence level, but will be consumers and purchasing. And for India, like some other countries, there's some very big drawbacks as well. India, for example, has a very huge and inefficient bureaucracy, and they have tariffs. Look at the tariffs on textiles is 300%, 75% on autos. It's a worldwide change. It's a worldwide change in consumption, and it's going to have an impact on what we do. Information. We talked about the libraries earlier in the program. The work that Community Attributes was doing for the Gates Foundation on libraries. Information is moving worldwide. The same information available to us in the United States is available in China. It's available in India. It's available in Brazil. Information moves very rapidly. There was a time in which we had almost a proprietary lock on information. We were developing things. We were making things happen, and that information stood with those companies and those communities where the information was. But that information has made a world flat. In fact, there was a book that was written called The World is Flat. It talked about how that information is available completely through. Money is moving instantaneously. We're living in a time of globalization where money moves from country to country in seconds. It's no longer putting something in a pouch and delivering it somewhere. It's going into a computer system. that delivers funds from one country to another country or one person to another person in a different country, and it's an instantaneous kind of transfer. There was a time when, you had to transfer and make changes so that the dollar was becoming a currency where you didn't have to make those currency changes. There was a time when you had French francs and English sterling, you had the the German mark, the Italian lira. Those times are giving away, and you had currency exchange. Even in those times, even converting from a euro to a dollar or to a yen or to some of the other currencies that exist in the world today. Now we have a smartphone, and almost anyone can make that currency change without going through a lot of process. The U.S. Treasury trades worldwide, trades 24 hours a day, 7 days a week, and you have letters of credit that are issued by banks worldwide. It's been a time of spreading the wealth all through. There was this idea. Ideas were proprietary at one time. They were proprietary because information was guarded. Now you're seeing companies that grow up not just in the U.S., but instantaneously across the globe, in China, in Singapore, in the Ukraine, in Switzerland. Countries develop companies, or companies develop within those countries. There was a time when the United States was the country where we had the most business formation. What we're seeing is worldwide, business are forming at an ever more rapid rate, and they're growing more rapidly. This is the world in which we live. And yet, for all that, I believe that as companies grow today, you look at the exposure that they have, and they're getting international exposure. I believe there'll be a time when we don't talk about domestic companies and international companies. We don't talk about foreign companies. It will become a meaningless aspect. Companies that are headquartered in the U.S. will have international exposure, international sales coming in, and you'll have a proportion of their sales in those countries which will impact the sales in the U.S. When currency values change, it will impact their revenues and their profits. But where a company is domiciled will have less and less meaning as we see economies grow. It's happening. It's got to happen. How fast it will happen? I believe it's going to happen at an ever-increasing rate. And to stay with this and to be involved in this, I think will require a much more attuned time. Anyway, we're going to wrap up. Have a very good weekend. I think you'll be in for a special treat next weekend when you'll hear Mike and Julia on the program. That's next week. Until then, until the next time, we'll see you.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on AdamsFinancialConcepts.com. That's AdamsFinancialConcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Friday afternoon at 3 for more About Money with Mike Adams, here on Money Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.